Let's take a little bit of a step back. Let's go back to the debt situation. So the reason I'm minimizing the importance of it is not that it doesn't matter. It's that if that's the way you're going to trade off things, it's going to cost you money. As long as profit margins are growing, then we don't have what ends up being the negative endgame that the doom and gloomers are looking at. But there is a structural change happening in the world. Bonds are not a great place to invest right now because you can't beat inflation. I actually believe over the course of the next 5 years, the realization will set in that even stocks around the globe cannot outperform inflation. And the reason will be
Jordi Visser is a trailblazing macro investor who's all over AI. A prolific writer for 22V Research.
He's dedicated his career to demystifying how artificial intelligence is reshaping markets, labor, and global strategy, earning recognition as one of the sharpest minds connecting finance and technology today.
the trade war is real, meaning I don't think it's going to continue. I think rare earth minerals and the AI trade is ending bad because China and the US are at a stalemate, but this is why I believe in Bitcoin. The governments are just going to do whatever they need to do. Stocks will benefit from the profit margin side. Consumption will keep us from having a recession because if AI is driving profit margins, then stocks are going higher. I think by the end of this year, I don't know what the phrase will be for it, but there will be a phrase for how we're just not seeing any job creation, but at the same time, we're not seeing any job losses.
Hey guys, I just wanted to let you know, I published a new book, The Bitcoin Enlightenment, co-written with my buddy Daniel and none other than Mexican billionaire Ricardo Salinas. It's a deep dive into the monetary system and its future. In it, we make the type of connections that go beyond what you'll hear from your average Bitcoiner, MMT advocate, or macro pundit. So grab your copy on Amazon today. You'll find the link in the show notes. And now, on to today's show. Hey guys, welcome back to Less Noise, More Signal. I'm pleased to welcome Jordi Visser to the show today. Hey, it's cool to have you here, Jordi.
Great to be here.
Yes, great. So, and maybe for all the people who might not know you, could you quickly introduce yourself?
Most of the 8 billion people on the planet don't know me, so I'll give you a little bit of background. So I started my career at Morgan Stanley and was there for the first 12 years of my career. Did a lot of different things there over the 12 years, changed jobs about every 2 years inside the firm, but all of it was inside equity derivatives, beginning on the risk management controller side, then opening an office for the firm in Sao Paulo, Brazil back in 1997, which was great because it was during the emerging market crisis. So all of my formative training in terms of macroeconomics started there. I came back, the firm gave me the S&P options book to run. So I stayed in derivatives, ran ETFs, and eventually started my own macro hedge fund and did that for 2 years before rolling it into a bigger multi-strat as one of the pods there, but also part of the executive committee, and eventually became the CIO. And then that fund closed down last year, and I had to make the decision as to whether to stay on the hedge fund side and stay kind of in what would be considered a quote unquote job. But my views of the world over the past decade, and in particular in the past 3 years since ChatGPT rolled out, were that all businesses, all hedge funds, anything you can name will be in constant disruption from the pace of acceleration in AI. And that the only way truly 5 to 10 years from now to be a survivor of that disruption is to be an entrepreneur and start using AI every single day, which is what I've decided to do. So I create content for a variety of different places. I have multiple revenue streams. I consult for people. I do writing and Substack. So my career has really shifted in the last 12 months, and it's helped me a lot in terms of my investment portfolio. I'm very focused on Bitcoin, but I'm also very focused on the AI infrastructure trade. And this year, if I learned anything, it's that the amount of people that are educated that do not understand how important artificial intelligence is to the macroeconomy and how much it's disrupting it already, that it's going to be a long road before people fully adopt to this. So that's the background. That's why we're here. Let's go.
Nice, amazing. Yeah, exactly. That's also where I want to take the discussion AI. But just quickly, you mentioned Brazil. Did you live in Brazil as well? I
Yeah, I
guess, for
lived in Sao Paulo for 2 years. I left right after the
yeah.
devaluation, about a month after.
Okay, yeah, now because I used to live in São Paulo as well, near Morumbi. So yeah,
Right.
it's a special place, I guess. It's so vast, especially me being from Switzerland. Maybe you I've lived in New York, so you might be familiar with such big cities, but I was like overwhelmed at some point, you know.
How
But
old were you when you were there?
the first time I was 18. Yeah, I was there for un anno di intercambio. Yeah, like an
So,
exchange year.
that's near Morumbi is where the Scuola Graduata is, the American school there,
Yeah.
and, that's where my, oldest daughter went to school, and so I spent a lot of time in Morumbi, but I lived in Santa Amaro.
Oh, okay. Yeah, yeah. No, it's been amazing experience over there, but at some point I was just like, I have to go back to Switzerland. It was just too overwhelming going to the parts for a run, you know, and like you were just flooded with people. So that was amazing. But yeah, cool to have some similarities there at least. So yeah, I wanna talk about AI obviously, but I want to start somewhere else, and that's with the whole debt situation because like for me, these are like two big terms that I want to sort of also square the circle. You know, like the U.S. debt situation, and then you get a lot of people who are really bearish on the debt situation and saying like this is not going anywhere, and I'm sort of of the belief, yeah, this is probably it. But then you have the whole AI revolution that's coming with all the productivity gains that will probably come down the line. So this is also counteracting force. But maybe starting out with this US debt situation that we're currently seeing, what is your outlook there? And especially also currently, I feel like people have been talking about this one big beautiful bill act a lot. Could you fill us in there? What's happening there?
Yeah, this is the way I'll fill in. I do a weekly YouTube video, and I say repeatedly that all of this stuff is noise. So since you have a podcast about signal and noise, um, the reality is, and I think Elon Musk's reaction over the course of the last 2 weeks would be the way that I would frame it for people. I think people are too obsessed with the numbers, thinking that whether this actually takes the deficit down or increases it, which again, it's impossible for anyone to know. And I say that with certainty because it's dependent a lot on where interest rates are. It's dependent a lot on where the GDP number is. So when everyone goes through this with a fine-tooth comb and they come out with it, I'll give a sports analogy. Whether you're talking about European football, you're talking about American baseball, at the beginning of the year, everyone has a forecast on how their team is going to do. You have no idea what the injuries are going to look like. You have no idea what other things that are out of control of the team are going to go. And the economy and the situation with where growth will be, where interest rates will be, the CBO does not know. So the first thing for everyone going, the more time you spend on this trying to determine that you should short bonds as the best trade, I will tell you that is a history that to me is mindless. It will lose you money, and that the best thing you should be focused on, again, is AI, because what AI will do over the next 4 years is make it even more uncertain what the future is going to look like. The relationship between labor and capital is changing. Labor and corporate America is changing rapidly. And so whenever I hear this and I go through it, I just want to remind people that before we realize that the printing press could keep us out of any deflationary situation, which brings us back to 2008. Before 2008, the Fed's balance sheet was $1 trillion. Before 2008, the debt situation was $9 trillion. Now we're at 36 trillion for U.S. debt, public government debt, and we're at still $7 trillion of Fed balance sheet, up 6 trillion from the low. This has been a complete abomination already. And so to sit there and focus like something grand is going to happen now, I do understand that interest payments are above defense. And that's why everyone has freaked out, because they've looked at Neil Ferguson's stuff and said, every time this has been in history, there's never been a time in history where artificial intelligence and AGI was sitting right in front of us, where humanoids were coming, where driverless cars were here. All of this stuff is nonsense relative to focusing on artificial intelligence. And so I'll just keep saying the same thing. If you focus on the debt markets and you're going to try to trade bonds relative to focusing on artificial intelligence, it's not the way you should be going. And I think most people that have history on this are going to face the same problem they ran into with the software boom from 2010 to 2001.
Yeah, that's an interesting viewpoint for sure. I mean, yeah, as you said, it's probably the wrong thing to focus on. It's just like something that's pretty emotional as well, and that sort of piques people's interest. When they hear it, it's like, yeah, all these doom and gloomers, as we already said. There's a lot of people out there, and it's just always flabbergasting how these podcasts get so many views. And in the end, I would argue as well, there's a lot of noise in all of this, but I mean, it's just sort of also fear mongering, I guess, in the end, and but yeah, to your point, you're definitely right. I mean, the other topic that's come up with that, is really the capital control discussion that's been floating around, and I think it was also reinforced with this keyword section 899 or 899. Can you summarize this for us as well, and what you think of this, and where could this, or where might this take us?
Yeah, this is more so. Let's take a little bit of a step back. Let's go back to the debt situation. So the reason I'm minimizing the importance of it is not that it doesn't matter. It's that if that's the way you're going to trade off things, it's going to cost you money. The government will keep interest rates in whatever level they need to be able to keep this going. And as long as profit margins are growing, then we don't have what ends up being the negative endgame that the doom and gloomers are looking at. But there is a structural change happening in the world. And before we get into the capital controls, the trade war is real, meaning I don't think it's going to continue. I think rare earth minerals and the AI trade is ending that because China and the US are at a stalemate. And the problem is the US needs rare earth and China needs chips. So at the end of the day, we're going to find some kind of an agreement where we're delaying the supply chains for at least 4 years while we both try to redeploy those. But the problem with the trade war is the global reserve currency has been the dollar. This experiment that has been tried since Bretton Woods is for the first time to have a global reserve currency that was not dollar backed. This was eventually going to happen because without having the governor of gold backing it, you're able to take as much debt as you want. And we abused that privilege and just kept going and going. So now we're at a point where on the one side, the debt is too big and it's forcing things that are happening. It's forcing central banks to buy gold because they don't trust the US. The US has lost the global reserve currency status as far as I want, not because of a choice, not because of what foreigners think. It's because the American people voted for Donald Trump to do this because the median voter in the US has suffered dramatically from the technological boom and the disruptions that have come from it. Whether you believe it's globalization or anything along those lines, the reality is technology and innovation have been growing rapidly. And to offset that, the governments have increased transfer payments and given people money. So if the trade war can't work, because like with Lehman Brothers, we found out that we were interconnected in a globalized world far more than we realized, the administration just figured out that they can't put 145% tariffs on China because then China shuts off rare earth, and rare earth is used in everything in the military, everything in semiconductors. You can go up and down the board. You can't actually build the data centers you want without the rare earth, and China controls 90+% rare earth. I highlight to everyone to go watch a recent video with Marco Rubio where he even basically said, I didn't realize how interconnected we were and how dependent we were on this situation. So if trade war is not going to work, then capital controls is the other side. Because if we have trade deficits, that means we have capital account surplus. So we've got a capital account surplus, and right now we have about $30 trillion of excess assets that foreigners hold. Those little things in there are going to give Trump the ability, if he wants, if they go through, to tax money leaving the country, both on remittances, but also on dividends and also on just overall investments. Whether or not he does that, different story, but I think the threat will be used because if you can't use trade, we'll move to the capital control side.
Yeah, very interesting. I mean, to me, it feels like I'm a lot younger, but when I heard this discussion going on with Trump in April, where he mentioned, okay, we will now do all these tariffs and really do an overhaul to the entire system. And it was taken up by so many commentators, and they were like, okay, now the whole world is going to change. All the capital flows are going to change. Like all the capital flows into the US will now go into emerging markets and other markets, Europe, and it will all be very, very different 3 years down the line. And now, as you said, a lot of things have already been walked back, and because it was just like too interconnected, and they maybe can't really change the entire system, And so my question would be, are we actually seeing this? And that was always said now in April, these changes. And then the same, that would tie into the question then, isn't it the same with the capital control argument now as well? They're trying to go down this route and it will end up not working as well, or is this the easier part and they can pull these levers more easily? This show is brought to you by NewHedge. In a market driven by complexity, insight is everything. NewHedge is a dedicated Bitcoin analytics and intelligence platform delivering cutting-edge analysis, on-chain metrics, and real-time market data. With 200 plus proprietary indicators, live derivatives data, and adoption metrics, NewHedge provides the depth and precision that serious market participants demand. Backed by some of Bitcoin's most prolific investors, NewHedge connects traditional finance with Bitcoin's evolving landscape. Gain your data edge today. Sign up for free now at newhedge.io and get 50% off your advanced subscription with the code SIGNAL.
Yeah, I think this is an easier one because you're dealing with investors, and without going through all the little semantics and the details on the other side, there's a lot of countries that do have capital controls already, obviously. And so this, I think, is an easier lever to pull because it doesn't hurt the US consumer in the same way. And also for China and for things like that, I don't think this is primary focus in terms of if people just keep their money in, then they're not getting a tax. They're getting a slight tax on the way out, whatever. So I think this is bad for the dollar. And this is what I would say to everyone who's going through. I think the markets are adjusting to reality. The first one is that doing business with the US is not as simple as it was before. And that's the first thing. So when you look at multiples around the globe and you realize that US stocks were trading at a much higher multiple price to earnings than the rest of the globe, and the fact that US rates were lower than every place around the world, I just think those premiums are changing. So the risk premium on both of those are changing, and that means multiples should compress or mean revert to other places. I think we've done enough of that. I think the other part is the currency. So the dollar has been the global reserve. It's been incredibly strong. And most currencies around the world are undervalued. So we talked about Brazil. When I left Brazil, which was in 1999, the currency had just broken from the peg. So 1-to-1, it was probably about 140 to 150 to 1 when I left. It got up to 6-to-1. So you've had a complete weakening with almost no appreciation except when commodities were going through the bull market for China. So I do think that this reality of the US is not open for business is part of this. The second thing is, and this is a take that most people do not have, but I believe the US stock weighting in terms of MSCI World is driven by companies that are built on code. So this is obviously the Mag 7 and other software companies. Technology is dominated and has been dominated by the United States. But the reason is because we had a stranglehold, not on innovation, we had a stranglehold on coders. We had a stranglehold on coding. And so if you wanted to build a business with the open capital markets, with the VC side, everything was in the United States, except for China, which is only set up for Chinese companies. So if you were anywhere in the globe and you were a young kid who was really good with computers, where wouldn't you? Of course, you want to go to the US, you want to be part of that ecosystem, you want to grow your business. What AI allows is the democratization of building businesses because you don't need as much capital. You don't need the people anymore. And so what people don't realize is every country in the world will now have the ability of building businesses that will compete with businesses built on code because coding is now free and ubiquitous. And so now you just have to come up with an idea. You don't need to know how to code. I build software myself. I do things in AI that amaze me. I have no training. I took 5 courses online to learn how to do enough Python. So we've had a democratization of competition, a democratization of technology and coding. And this will lead to the US weighting in MSCI World coming down just because I think people are going to take advantage of some of the coding dominance that we've had. And just remember, most of the companies in the US are actually financing the growth of AI. The hyperscalers' CapEx numbers are huge. I don't think they're going to be able to see the revenues to offset that spending over the course of the next 5 years, particularly as we get to AGI. So those two forces, the US is no longer open for free business the way it was before. I don't see that changing anytime soon. So I think foreigners are going to bring money back home. And at the same point, you're going to have a democratization of coding.
Okay, I see. Yeah, very interesting. How would I think from a macro point of view now, like about this AI revolution and that situation or that problem, like, because to me it feels like this counteracting force, like the debt situation, but like sort of I feel like all the doomers and gloomers are underestimating the productivity gains that will come from this, but will it really help to address the debt problem, or is it more in the sense of like, okay, it will sort of weigh the debt to GDP situation so that this doesn't get out of hand, or will it really be the case that less debt is needed, and in the end we'll raise we'll go less into debt as in a society, or where does this come in? I hope you get my question, because that's what I'm struggling with.
Well, first of all, the simplest answer is the U.S. does not have a debt problem. The world has a debt problem. This is not a U.S.-centric problem. So it's ridiculous for people to sit there and focus on the United States or on Japan, for that matter. Japan's at 245% of debt to GDP. So this problem has been around for a long time. And since the day I stepped in at Morgan Stanley, Japan was in a bear market and everyone tried to short JGBs for longer than ever. It was called the Widowmaker for a reason. So for people trying to focus on the U.S., have got a debt problem, and this is a major problem. First of all, it's BS. You can't solve markets with mathematics. If it were that simple, the debt would have fallen already. Rates are the same level they were 2 years ago. In fact, on the weekly videos, I highlight 2-year average is exactly where we closed last week in 10-year rates. So everyone's all fixated on how rates are moving higher, but we've been sitting here for 2 years. If you ask me, do I think rates are going higher? Yes, I do. I think they're probably going to go to 5%, 5.5%, 6%. Do I think that'll knock the equity market down? No. Here's the reality of what you said. At the end, what AI is going to do, if you're going to have too much debt and you're going to print too much money, then you should be having out of control inflation. That's another thing that people have warned about since the end of the great financial crisis. If you sat there waiting for inflation to come because of QE, we ended up having negative yielding debt around the globe. So everyone was dead wrong about that. They were dead wrong throughout that decade. And it was all because of software boom and because we were having deflation that was happening. We have a demographic issue around the globe. We have a labor shortage right now. Inflation is not happening in any place in the world right now, and I don't see it as a major problem. So is AI creating productivity gains? It absolutely is creating productivity gain. It's keeping inflation at this point in check. But the other thing that's keeping inflation in check is that AI is creating a distribution of wealth problem that all technology has done. And with the distribution of wealth problem, the median person in the United States of America cannot afford housing. The problem is not just a U.S. problem, it's across the globe. If you can't afford housing, how can there be inflation at this point? We just have an issue right now where they're going to have to find ways to deal with this. The service side is where the inflation is and has been. That will be taken care of with AI over the course of the next 4 years. We're not going to have a deflationary situation, but the counterforce of the inflationary pressures from the government and the debt have been offset by the deflationary forces of innovation, the mobile side, the software side. All of that stuff has happened. I do think the negative consequences of having innovation go so fast are about to show up. I think the jobs market in the U.S., as I highlighted in this week's video, is going to be a problem. But we have other issues. You want to ask a question? Go ahead.
Yeah, no, that's great. But I mean, another force I think that you were talking in one of your videos was really, that half of the spending in the US is sort of related to age and health. That's really what a lot of spending is on. And now me being a younger person, a really healthy person, seeing this within my colleagues as well, that there's like this health longevity hype going on. And I'm hearing from other people here in Switzerland that booze alcohol consume is way down and all these things. I mean, if this were to morph into a bigger trend, and I guess it might is already, then this will also help to address the debt situation, because like if people just are healthier, live longer, can be more productive, how does this tie into the entire situation?
Yeah, I write a lot of research for the people who still prefer to read over videos and podcasts, and I do stuff for myself on Substack, but then also 22V Securities. And I wrote something about this, about how of the $6 trillion in spending, $3 trillion of it is related to Medicare, Medicaid, and Social Security. So a combination of older people and unhealthy people, which also kind of subsect with older people. AI is going to deal with these expenses over the course of the next 5 years and stop their growth. It's going to happen through the concept of longevity. A lot of what I talk about and write about is about the impact that AI is going to have specifically on the biological side and the ability of reversing aging. That's what's going to be coming. We're going to have early detection to the point where we find out what we have day one. Most of the spending that happens for diseases have happened at the end when they've already accumulated over time. If you stop them in their track day one, these problems can be taken care of. So we're getting to the point now, and this is one of the accelerations that's happened. I think, people don't really understand how fast AI is moving on this front. So it's only been 2.5 years since ChatGPT was released. We got to 4.0, 4.5, and we've been waiting for ChatGPT 5, which the rumors are it'll come out in July. At the same time in July, we're going to have DGX, which is an NVIDIA AI computer. The reason ChatGPT or GPT-5 is so important is because this is when we reach PhD level. And I advise everyone to go bring up in ChatGPT after this interview is done, a paper that was written in June of last year called Situational Awareness. And just ask, after you bring it up, it's 165 pages. It was written by a former lead researcher at OpenAI. It'll go through the importance of GPT-5. People don't realize exponentially how fast solutions are happening. But once you get to the PhD level, meaning it's as smart as any PhD person, that means you have infinite amount of people working on problems that have defied human beings for the course of time. So think of it as millions of Einsteins will be created. You're going to have a scenario now where you're going to be able to, starting this year, solve problems. And then in another year, you'll have something that's well above that. So then you'll have something where you're going to have 100 times Einsteins in terms of the intelligence, way beyond it. So everything we're talking about, those are linear numbers. People will get unhealthy. The numbers will go up. You're going to have solutions for these problems. That's why I always say, if you're trying to forecast the future, you don't know what it's going to look like because of the speed of artificial intelligence.
Yes, I see. Yeah, so fascinating. That's just great. Can you spell out for me how AI will actually help produce productivity enhancements and sort of what impact it will concretely have on companies' profit margins? I guess it is really increasing it, and then also further down the line, like who's profiting from it the most? Will it be the Max 7? Will it be the solopreneurs? Will it be the smaller companies? Like, yeah, what's that like?
Yeah, it's a good question. So profit margins are, I'll stick with the US. Around the globe, profit margins have been going higher. In the US, they've been going higher much faster than the rest of the world. But if you break down the S&P 500 and you just take the Mag 7, their profit margins are through the roof. The rest of the S&P 500 X, the Mag 7, they've been trending higher, most of them since the 1980s. But they have not gone up as much as the Mag 7. So the Mag 7 profit margins are enormous. Now, what does the Mag 7 have that these other companies don't have? So let's just use Ford and GM as an example versus Tesla. Tesla's market cap is $1 trillion. They have about $9 billion in debt. Ford and GM have a market cap of $100 billion, so 1/10 the size of Tesla, but their debt is combined $300 billion. So if you're an old company from the fiat system, your equity to debt ratio is ridiculous compared to a modern company. So all of these digital companies are able to make money. They've been they've been through competition, eradicating every business that has debt and people. They have less people, they have less debt. The Mag 7 basically have no debt. I've talked about the fact that everyone who's a macro person, I just want them to answer one question for me. We live in a world where the biggest companies in the world have no debt. And now they're growing their business for the first time in the history of capitalism without adding people. So over the last 3 years, the Mag 7 have not added people. So they're growing their business, and this is where the productivity comes. Their revenues are growing rapidly. Their earnings year over year in the first quarter were up close to 30%, or actually over 30% when you add in NVIDIA, which just reported. They haven't added people. How do you grow businesses that fast and not add people? Historically, if you were going to grow businesses, you needed to add people. So what's going to happen going forward is companies like Disney, companies like Micron Technology, companies like JP Morgan, cross sectors in other areas, their profit margins are going to go through the roof too, because we've entered the point where adoption will happen. And this is the thing you have to remember. ChatGPT was only released 2.5 years ago. Benefit of getting rid of people really needed either people to adopt to it quickly or for the agents, the agentic world, the digital employees to start working. And the digital employees start working this year. AI agents is the theme for this year. Then next year, humanoids will become important for companies that are in the processing and logistics. Amazon already has more robots working for it than it does people. So you're entering a world where the companies, the large companies in the S&P 500 are about to go through a massive profit boom. But it comes at the expense of wages and it comes at the expense of hiring people. Now, like I mentioned, we do have a labor shortage, but the people that are displaced, the really talented ones, are moving to the startup world. And those companies are not going public. They will stay private, entrepreneurs. And that was a choice I made. I didn't want to go manage people. I had managed hundreds of people over the year. I had had enough of it. And I didn't want to work for a company that wasn't investing in AI and crypto. And so I wanted to build my own business where I didn't have to go sit in an office, waste my time, not be able to use ChatGPT and get caught in this world. So we're entering now the phase where the profitability side, profit margin side is going to start to accelerate, but it comes at the expense of workers.
Mhm. Yeah, that's also so interesting. I want to talk about labor, the AI effect, and then also labor's government-sponsored labor statistic and what effect this will have on it. But another question, because I'm hearing, and I think I read it somewhere in your blogs as well, is sort of the effect on interest rates again. Because I feel like, as you explained, like the Mac 7 and the bigger companies, they already don't have any debt, and to me, it feels like AI will really collapse time. I think that's also something that you've written about, and then obviously you don't have to go into that much long-term debt anymore, and that should also have the effect that maybe interest rates could move higher because of that. Or is there a link that you could explain to us as well?
Yeah. So I think that the point that I was making and kind of what you're talking about is interest rates have become less important than they were in the past. And I think anyone who doesn't realize this, if you just go back to 2022 and think about where we were in the final quarter of that year, the amount of people calling for a recession and the levels that it was a foregone conclusion. And the reason was because the U.S. had just raised rates from 0 to 5.5. Never had we seen that fast of a rate rise in 1 year, so it had to end up with a recession. The Fed was saying openly that they wanted the unemployment rate to go higher, that we would not be able to kill inflation without the unemployment rate going higher. Neither of those happened. The Fed never got the unemployment rate to go up anywhere. And at the same time, amazing things happened, meaning corporate net interest payment fell back to the lowest level since 1980. And it doesn't get a lot of press. If you go search it in the news, you'll go see the chart. If you go to the Fred database for the St. Louis Fed, you'll see it. But what ended up happening, which people didn't realize, is as we move short-term rates higher, yes, long-term rates did go higher. And people that need to borrow money saw their interest payments go up, assuming they had to borrow more money. But most companies from the fiat debt-laden world had already refinanced out and turned their borrowing out. So they haven't been hit. This year starts because we're 5 years from COVID. So this will be the point that you start seeing corporations run into the problem where they have to reset their rates from where they were very low to much higher rates. So that'll hurt them. But the cash being accumulated by the cash-rich companies, which are the Mag 7, who are loaded with cash, they just got money on their interest, on their cash balances. That's why it went down, because those companies, the amount of money they have is far greater than the debt that was on the other side of the balance sheet. So if you're just left in a world where rates don't matter as much as they did before the great financial crisis, and that's because of the acceleration of tech again, none of this would have happened before 2007 because we didn't have companies like the tech companies that had no debt. This all happened from the beginning of the smartphone and software.
Yes. Yeah, I see. I mean, one thing that comes to mind, and I'm not sure if it is related, but you're probably, or you're surely familiar with Michael Howell's theory, right? I think he's sort of saying also that the interest rates are not as relevant anymore. And his argument, as far as I understand, is really, it's a refinancing thing, and that you need balance sheet capacity. So that's what's more important. Is this related to what you're saying? Is it related to what he's saying, or can we tie this together, or is this like sort of separate?
Michael Howes, again, I've heard his work before. He's using the term cycles, and liquidity cycles and all this stuff. And the problem is, about 60 some odd percent of the global debt is in dollars, and the dollar is weakening right now. So liquidity, as far as I'm concerned, is going higher. If someone has borrowed money in dollars and it's now weaker, they get to pay it back with a stronger situation. So again, I'm not going to go in and talk about other people who get paid for doing content, since I'm in the same business. And I want everyone who's doing this to have the opportunity, because there's an audience and a voice for everyone. We're all have a probability of being wrong. We all have a probability of being right. But I just differ on the situation of using historical liquidity cycles based on what he's talking about. I do agree that there is a shelf coming in terms of borrowing. It's very clear. I mean, the U.S. debt, there's a lot maturing. If you go through the OECD report, in terms of the debt report, which comes out, I think by 2027, about 40% of all debt that's out there is maturing on the 100 trillion plus debt that is between corporates and government. That's around the globe. So his point is valid that there's going to be more money that's coming out. But I just think the banks will buy, the governments will do what they need to do to buy the debt that's necessary. And we're actually in a situation where the liquidity cycles of the past, one of the reasons they don't matter is because the U.S. government, most of the debt is maturing in the beginning part. And so I just thought, this is why, we haven't talked about it, but this is why I believe in Bitcoin. The governments are just going to do whatever they need to do. Stocks will benefit from the profit margin side. Consumption will keep us from having a recession, because if AI is driving profit margins, then stocks are going higher. Stocks drop to dominate the U.S. in terms of the spending habits that people have learned, because we heard about the savings rate causing a recession, and then all the money that was given from COVID. I could go on and on about all the recession fears. Liquidity is just another one, and I don't buy into it.
Yes, I see. Interesting. Yeah, before I want to move on to Bitcoin and actually tie this into AI, the thing that I want to finish off with is this unemployment stats thing that you were related to, so what will be the point of such unemployment stats going forward, like government sponsored unemployment stats that everyone is so glued to today and waiting for them to come out? If I understand you right, because of the AI revolution, this is just going to be not that relevant in the near future anymore, right? And how do we deal with this?
I think by the end of this year, I don't know what the phrase will be for it, but there will be a phrase for how we're just not seeing any job creation, but at the same time, we're not seeing any job losses. So what I highlighted this week is just what's happened so far this year, particularly since Trump took over. So if you just look, we had a labor number this past Friday. It came out in the low 100s. That's where we've been this entire year. So if you go through all of the labor numbers for this year, we've been somewhere between 100,000 and 150,000. If you go through the numbers, you will see, and I highlight this in this past weekend, the only two areas that are still creating jobs, because government has now fallen off too, as they may not be cutting jobs, but there's no job growth in the government anymore. And that was a steady 40,000 a month. You're left with a scenario that it's healthcare jobs, which again goes directly towards the Medicare, Medicaid, and aging problem. And then leisure and hospitality, which again is baby boomers that have money saved up from the stock market and their 401ks, and they're spending money and they're traveling around and doing the things they need to. So those two in this prior month were over 90% of the job creation. And I showed in there that those two sectors were now down on the last 5 months, averaging 35,000 a month. And it's been declining, and it's much lower than it was before. So our economy has become government subsidized from Medicare, Medicaid, and then them deciding the stock market's not allowed to fall. And so if you don't let the stock market fall and you're just giving people Medicare, Medicaid, and Social Security, then they end up spending enough money to keep the jobs going. The problem is those jobs are very hard to replace with AI, and it's going to take a long time for those jobs to be impacted. We are going to impact transportation jobs, but we have a natural shortage of labor, 300,000 people a year in the United States now, ex-immigration. Since we've basically closed the borders and we've scared the hell out of people that are inside the country, as you can see with riots happening over the weekend, we've entered a point right now where the natural demographic change in the labor pool is taking away 300,000 a year. So we need to fill that gap, and that's what AI is going to do. The thing that slows AI down from being adopted today is the inertia of human, the bureaucracy that Elon Musk ran into. Every corporation, the ones I mentioned, Disney, JP Morgan, They can't get rid of people fast. There's a lot of reasons why they won't. But will they stop hiring people? Yes. Does it hurt college graduates? Just go look up what's happening inside the country. So AI is a lot of ways to impact the labor market. I think the biggest way it's impacting the labor market right now is something I wrote about in Substack that I believe in. I have 4 children. 3 of them work in the healthcare field, and they've complained about the fact that they just don't see upward mobility. The corporate ladder has been eradicated because of AI, and now because of the healthcare side, it's just very difficult for them to see making a lot more money in the future, and that creates a loss of hope. It creates discontent, and I think that's what's leading to the voting styles that we're seeing around the globe. And I think AI is going to continue to add that pressure to people. It's why the paper I'm writing this week is teaching people the first step in embarking on how to become an entrepreneur and how to use AI and build a relationship with it. Because I just feel that 99% of the people I meet are not using it in the way that they should, partly because of their company won't let them, but partly they just have not figured out how to use it and are intimidated by it.
Yeah, that's exactly the point. I feel like that's intimidating a lot of people because they've heard about it, but they don't know how to use it yet. And then they don't even know how to start. And that's the problem with so many things today. You have so many podcasts, you have so many YouTube videos, but then because there's like a swath of everything, you get like sort of drowned and you don't even know where to actually start. But I mean, as I said, as I'm hearing you, these unemployment stats, or GDP stats, all these macroeconomic or macro relevant stats that we're dealing with today, it feels like they will become ever more meaningful. And my question is, will the general public and the official class of economists sometime catch up with this? And for the time being, the ones like you and maybe some others who understand this will just be ahead of the curve and can sort of take advantage of this as well? Or is there ever going to be a day where like, okay, we're going to turn away from these unemployment stats because like they're just not painting a real picture of the economy anymore, and that's why we don't want to use them anymore in doing forecasts and stuff like that?
Yeah, I mean, it's actually staggering how many people try to invest based on the data that they're getting today when, the expectations right now, the latest I've heard is that the labor numbers of the last year will be revised down again. And I'm hearing on average about 40,000 jobs a month. Where we are right now is 140. So we're talking about taking down about 30% of it. I just think at this point that people don't understand that the economic statistics, they really, in a complex world like this, it's hard to calculate. GDP, the measurement itself, is calculated differently all around the globe. Every country handles the calculation of it differently. But more importantly, it was created back in the 1930s during the middle of the Industrial Revolution to help measure what GDP was on tangible goods. It has no idea how to deal with intangible goods. So if you think about how much the iPhone destroyed GDP, everything that's an app on your phone was a physical good. And now it's just a piece of software where a company that built it has, no people. I was just looking at DocuSign last week. The stock fell. And I was sitting there shocked that it was still in business. At this point, I'm sure I can build a DocuSign competitor right now. And the only thing that doesn't allow it to be used right now is because I can't necessarily get people to use it. But you can create the app right now while we're sitting on here and do it in probably an hour. Actually get payments through Stripe and have it done. So GDP was something that was a statistic created by Simon Kuznets a long time ago. It's been completely it's been made useless at this point. And so I've defined the economy in the US, and since I'm in the US and I try to deal with clients that are US based, there's 3 economies in the US. There's the digital economy, which is growing rapidly. There's the industrial economy, which is represented what Simon Kuznets had originally created, which is getting smaller every day. We don't have many manufacturing jobs. We don't do much. That's why Donald Trump basically was trying to help the Rust Belt. It's called the Rust Belt for a reason, because we just don't have a big industrial part of the economy anymore. And then the third part is the government. And the government has grown bigger and bigger because it needs to offset the loss on the industrial side, because that's where a lot of the people are. So if you view this as that the government has been subsidizing the ability of the part of the economy which has been disrupted. If you need a better analogy, Amazon won and all of these mall retailers lost. a lot of them are still in business. But when they were going out of business, the government has to find a way to have transfer payment to these people because they're citizens of the US. They have voters, they have politicians that need that they vote in to make sure that they're helped, that they can't get a job, while Amazon and these companies take trillions of dollars of market cap away from that part of the economy. So the government has been helping and creating this. That's why when people look at the debt directly relation to the disruption that has happened. And so when you take all three of those together, GDP cannot be a relevant statistic, and the payroll numbers, they really don't tell you how the economy is doing the same way that interest rates don't. And unfortunately, for macro people, of which I'm one, managed macro portfolio for a long time, it's really, really hard when the historical data is garbage in, garbage out. But I think that unfortunately, that's where we are right now with AI.
Mhm. Yeah, I see. Yeah. Yeah, I totally see this. I mean, I had a similar epiphany when I was traveling the world as a digital nomad, for like 3 years back. And obviously, um, to me, it dawned on me that when I was traveling and talking to all these people, and they are going in the digital economy or part of the digital economy and the crypto economy and doing a lot of creating a lot of value, which is then sort of remunerated in all these crypto tokens. And they probably hardly ever showed up in any sort of statistics, and maybe further down the line at some point, yes, they do, but at least in the middle, there's a lot of that's just being left out. And there I was also like, okay, it just shows me right off the bat that this statistic doesn't go well with today's world anymore. So yeah, and there's like many of these forces, some of the forces that you just described. So yeah, it's just so interesting, and many people don't really understand this. But I mean, when maybe before I want to go to Bitcoin, that's one thing, the last thing that I want to talk about. But like, obviously, when I talk to people about AI and some of my friends, they're also still sort of worried. It's the worry that okay, this is going to take away my job. And in the beginning, it was like, okay, we'll take away blue collar jobs, and now you also hear like I think it was the Anthropic CEO that warned like AI could eliminate half of entry level white collar jobs and stuff. So what do you say to these people? I mean, who are actually still very much afraid of what's coming here?
Okay, they should be afraid, but they shouldn't be afraid of AI. They should be afraid of not using AI. And that's the biggest problem. So I'll just say this to everyone. The reason I wanted to become a consultant for AI and crypto is because most people don't believe in either. And to me, I don't understand how a person doesn't understand the value of Bitcoin, but does understand the value of investing in stocks. I don't understand the difference. And they would say, I don't understand how you invest in Bitcoin. They're not making any money. They're not doing anything. The only thing that makes any investment worth money is if other people believe in it. That's it. You're not investing based on some mathematical side. You're investing based on something people believe in. AI will compete with every single business going forward, not just your job. But if you believe, as I do, that all companies will be disrupted, then how can you value your investments owning something that is about the future discounted cash flows, not the past? It's not about what companies made. If tomorrow Google made half as much money as it did, the stock will fall 70% unless they can come up with some reason that this isn't going to get worse going forward. You see what's happened to their business anyway when they weren't able to deal with the search problem. What's happened to Apple stock this year? Apple hasn't made inroads into AI. If you fall behind from AI as a company, everything gets revalued. Now, for people, the simple advice I can give, which makes this very easy, the easiest way to use AI is to think like a child. You have to crawl before you walk as a child. But then once you get and you're able to walk, you start talking. You start learning how to communicate. There's a voice mode on ChatGPT, which is free to everyone. That's what Siri and Alexa were supposed to be when they came out. They don't work, and those things are useless, and they're actually annoying and a pain. But with ChatGPT, you can have a conversation. And every single time that you make a decision in life, anytime you make a decision, ask for its opinion on the decision you've chosen to make. If you do that regularly on anything, if you don't like your job and you want to go embark on a new career, type into ChatGPT, or better yet, say into ChatGPT, I'm thinking of leaving my job. This is what I'm good at. This is what brings me joy. I want to hear all the trends and all the things. I want you to put together a business plan for me that I can start today on actually transitioning from this while I still have a job and I'm still getting paid. It will give you an incredibly thorough answer. And then you can ask it a follow-up question. Well, if I don't want to do that, I only want to commit 1 hour a day, what should I do? If I want to learn how to do this, how can I do this? Every single thing, every decision you make, every thought you have should be brainstorming with AI.
Is this also how you personally use AI? Like maybe that's asking too much, but how are you personally using it? Is it like part of your everyday life, and then you just fire away, and pretty much every decision that you take is sort of run across by AI or run past AI?
I use it for every single thing. There's not one single thing that enters. I mean, anything I used to do in Google. So the first question is whatever you used to do in Google, you do in AI. But the difference is I don't read books. So if someone says this book was great and I like the topic, I will go into ChatGPT. I'll go into the park. I'll go on my iPhone and say, I want to have a conversation about Annie Duke's book, Thinking in Bets. Give me a summary to start out with. Okay, now give me the chapter title so I can see which one to write. I want to talk specifically about chapter 1. Let's go into details. What is she saying on this? Give me the key points from this chapter. Basically, by the time I'm done with a 1 hour walk, 3 miles, I've gotten 6,000 steps in. I've had a conversation, a verbal conversation. And for people that don't realize, speaking out loud, you actually remember more. Brainstorming with the smartest person on the world, which is what AI is, you not only learn more, you connect dots. It leads down to rabbit holes that you haven't thought of. I'm in the middle of a paper about Charlie Munger and his lattice work of mental models. Everyone has heard the term polymath. They've heard about Leonardo da Vinci, Ben Franklin, Charlie Munger, polymaths that have existed that were able to think across disciplines and how important it was. AI can talk about every single discipline. You can learn whatever you want. If you want to have a conversation about Socrates, if you want to have a conversation and say, hey, I want you to speak in the tone of Socrates and give me basically your Socrates, we're having a conversation. I want you to go through. You can do whatever you want with it. So if you don't think creatively and you don't use it, you're losing the chance of developing a relationship with it, learning a ton, but also getting rid of the inefficiencies in your life about the way that your brain currently operates and thinks, which has been destroyed by the school system. The school system told you to find a job. You can't find a job. You have to learn how to be an entrepreneur. And the only way you can be an entrepreneur is to think like a polymath. And the way to think like a polymath is to learn like a polymath.
Yeah, I see. How do you deal with the argument that I'm hearing from a lot of people again, that they're saying, well, AI is great and I do use it, but I use it as a first sketch, because like I feel like it spits out, ChatGPT still spits out a lot of incorrect takes. If you really want to go deep, then and I experienced this myself, when I go into history and I feel like, okay, maybe this time around it didn't do it all correctly. So you use it also to self-correct, or how do you deal with that problem if it is a problem in your mind?
The only problem is that human beings are so insanely, I don't even know what the right word is. They actually believe, do you believe what you say all day long is true?
Yeah, no, I wouldn't. Yeah.
How about we go back to all your podcasts, we bring them up and I go into ChatGPT and say, hey, go through all the transcripts and show me all the hallucinations that were mentioned on here. Include me in it too. Human beings hallucinate all day long. Who do we learn from? Human beings. It is ridiculous for people to sit there and think that the only hallucinations, in fact, if you listen to Demis Hassabis, who runs DeepMind, he calls hallucinations the most important part of AI. Because these are imagination, these are creativity. This is where things are solved that humans didn't think about yet. They are constantly trying to come up with these. So I embrace hallucinations. I like them. This is a lazy argument for people who are, I'm not going to use it until there's no hallucinations. First of all, hallucinations have gone down dramatically. Secondly, there are so many ways to reduce them based on how you go through the process. I will tell you that when I write a paper, I do a deep research paper. I start in one LLM, then I go to another and I have a prompt that basically says, go through this and find any things that's not factual and make corrections in it and then give me the new copy. And then I can bring it into the next one and the next one and the next one. It takes no time. So when I'm doing a 60-page report on a topic that I care about, I did one recently on Brazil and the rare earth mineral situation, and how long it would take for Brazil to get the rare earth minerals out and how the country is going to benefit from a weaker dollar and rare earth mineral, you have to understand that hallucination can be reduced by human beings, but also sometimes they're the most novel, creative things that come out of it.
Yeah, that's such an amazing point. I mean, in the end, it reminds me of this nirvana fallacy, that like people have when they try to use stuff, and they're always like comparing the actual thing with this unrealistic sort of idealized alternative. And yeah, exactly as you were pointing out, like we humans, we function like this, and with AI in the end, I mean, yeah, because it's that proficient, you're probably a lot faster and better at sort of canceling these things out in the end if you know how to use it. So.
I live in a country where conspiracy theory is like a phrase that people use. How is that any different than hallucinations? I have Fox News and I've got MSNBC.
Yeah,
They report the same thing with two totally different arguments. So where is the hallucination thing with humans and what they watch? Don't sit there and overanalyze the ability to go through a conversation with something that has access to all the information. Trust that if you hear something that is not correct, you will say, that doesn't sound factual. Can you actually come back to me and check that and go through it? That's the way you go through it, just like you do with every human being. Every human being puts out fake news every single day.
yeah, yes, for sure. Great point. Okay, as I said, I want to come to this last topic, which is the connection between Bitcoin and AI, and I heard you say that Bitcoin is the purest AI trade. Can you explain yourself there as well?
Yeah, this comes from three levels. So there's really three parts. First is the innovation part. So Mark Andreessen has said, and he wrote a paper called Why Bitcoin Matters, which I still very seldom meet. Have you read it?
Which one? Sorry.
Why Bitcoin Matters in 2000.
Yes, I did. Way back. Yeah, yeah. I probably at some point I did. Yeah.
So Mark Andreessen wrote Software is Eating the World back in 2000.
Yeah, exactly. That's
And
what
if you
everyone
just
read.
focused
Yeah.
on that, you would have made it. So then he wrote Why
Yeah.
Bitcoin Matters, where he literally went through and said, it is arguably the third most important piece of technological evolution behind the personal computer and the internet. And the reason was because we were solving for the concept of the money. The internet could not be fully developed. And remember, Mark was involved in the internet with Netscape. This is where his fame came in. And he said, people don't realize how we had tried forever to come up with internet money and we weren't able to do it. So rather than focus on is Bitcoin the innovation for the guardrails and the ability to go through it, leave that alone and just go through the Bitcoin white paper, solve the problem that had existed. And that's what makes it important as a starting point. From an innovation standpoint, this is the year of stablecoins. Stablecoins will dramatically increase the network effects. They're happening. This is the exchange, and it comes at a time when we're looking for the new global reserve currency. There will not be a new global reserve currency. What there will be is digital money that is a bridge between the digital world and the fiat world. And that's what stablecoins represent. And so stablecoins will lead finally to the transactions going around the globe at light speed for zero cost. And that's why the Circle IPO did so well last week. So for everyone who's wondering why Bitcoin right at the beginning is connected to AI, the amount of transactions around the globe are about to go parabolic. And the reason is because AI agents will be doing most of the transaction. It will no longer be human beings. It will be done through AI agents, which will be using stablecoin because that will be the money of the internet. So when you hear AI agents are going to be doing a lot, they'll be ordering your food, they'll be doing this, they'll be transacting in stablecoins. They won't be transacting in Visa credit cards. It will be stablecoins. And so all of this will be going on. So you're going to see the volumes pick up. So that's the network effects, which are about to start this year. And every time that goes on, a wallet is set up. One of the problems with Bitcoin is the fact that it's been difficult for older people to set up a wallet. They didn't understand it. They didn't want to go through it. Once this becomes easier, which is what stablecoins bring, once dollars enter the digital economy, they need a place to go. You can either bring them back to the fiat world and then put them in something for growing, or you just immediately transact them into Bitcoin. So Bitcoin will benefit from the amount of money transitioning from the fiat system into the digital economy. And that's going to happen constantly. I very seldom meet a person who, once they have money in the digital economy, move it back to the fiat economy. It usually stays in there, and they kind of have these parallel tracks. That's what I have as well. I have some money right now in the fiat world, and I have most of my money in the digital world at this point, and most of it's in Bitcoin. It's the part I believe. The second part is, and this is really important, AI is going to continue to force the governments to print money. It will accelerate, it will put pressure on jobs, which means the distribution of wealth problem will continue to worsen. The debt problems are not going away anytime soon. And so Bitcoin benefits from people being frustrated in the system. It will continue to disrupt it at this manner. And the money, again, people are looking for a new global reserve currency. They're looking that the dollar is not it. Bitcoin continues to get it because people now want to be outside the system. They don't want to be in the system. They want to be outside the system. They don't trust the governments. This is happening more around the world. And so you end up in a situation where AI continues to put the pressure, the same pressure that all technologies have put on to force debt to GDP around the globe, because they need to transfer payment money to the people who are being disrupted by the technology. And AI is going to make this far worse than anyone can imagine. And then the third part, and again, maybe not as important, but something that I believe is going to be there. I think we've reached a point now where institutional adoption is just starting to pick up. The demographic side will continue to force money over to that side. People are going to realize that their invested dollars will be disrupted by AI. Like I said, you've made an assumption. Bonds are not a great place to invest right now because you can't beat inflation. I actually believe over the course of the next 5 years, the realization will set in that even stocks around the globe cannot outperform inflation. And the reason will be because AI will continue to disrupt companies, and the winners of AI will be startup businesses that never go public. This is where the problem is that your fiat investments, to me, are going to start to underperform inflation, and this will drive more money into Bitcoin. So I've termed this year, this is the year I think we are going to get a spike in Bitcoin. I think there's going to be a month this year where people are going to be shocked about how far and how fast it goes. There's not going to be one catalyst that goes on. If there were capital controls, I'm sure it would be the fire that started it. But I think we've reached a point now where volatility in Bitcoin has declined so rapidly. In fact, I was just going through it, that since the launch of the ETFs, we have the lowest 30-day vol on Bitcoin while it sits near all-time highs since really in the history of Bitcoin. And the reason that's important is I think people have been selling options to collect premium on this stuff. And I think we're going to end up in a situation that we're finally going to have a breakout. The breakout will be the realization, number one, that the global reserve currency is done, and number two, that they're going to have to print again this year in a meaningful way. And at some point, capital controls are going to be a story that I think he's going to threaten.
Okay, yeah. Now, given you've handed me now like a long ball, so to say, like what sort of price target do you have then for Bitcoin? What's realistic in your view?
I've publicly said I expect over 200,000 this year.
Mm.
I deal in probability distributions, so I think there's a chance we could go significantly higher this year just based on the things that I said. I think there's a short squeeze coming at some point. People continue to think of Bitcoin as a fiat asset. I remember in 1987 when we had the stock market crash in the US, that at that point, the pricing of options changed and the skew for puts became more expensive than the calls because people realized that stocks fall much faster than they can go up. So very seldom can you ever imagine stocks ever going up 10% in a day unless they've already fallen by 50%. But you can certainly see them fall 20%. We have seen in a day. So Bitcoin's the other side. It's a finite amount. And I think people have gotten too comfortable selling options against it. And it reminds me more of a commodity where at some point, if producers like Bitcoin miners have shorted too many call options against their future production, and you start to see it move higher, or people that have lent out their Bitcoin to lead a high life because they don't ever want to sell it for tax reasons, you just end up in a situation where there's a squeeze. And I think there's a squeeze coming at some point this year. And there's just a lot of things that could trigger it. And I think it's going to happen this year.
Yes, I mean, one comment that I heard you make is that Ethereum is holding Bitcoin back. That's what I found interesting as well. What are your thoughts there? Can you elaborate?
Yeah, it's not specifically Ethereum, but I think Ethereum and Solana in particular are very important to, let's just say, the enthusiasm in the space. You can feel how right now it's spreading further away from Bitcoin. So Bitcoin was the only place, really, the dominance has gone up significantly. We had the rally in Ethereum and Solana last year, and then everything really became an issue once the Trump meme coin came out. And you hurt the enthusiasm and the speculation, and we haven't seen it pick back up. So Ethereum and Solana have lagged significantly behind, and they are important. If stable coins are really accelerating and they're really becoming a big thing, the Circle IPO, the CoreWeave IPO, we've had a lot of SPAC issuance, which have been oversubscribed in the US for the Bitcoin. You've got a lot of corporate treasury actions happening. I think there's more and more enthusiasm that's happening with those things, but it hasn't really spread to Ethereum and Solana, which are the utility innovation token side, the guardrails of what's going to happen. So it reminds me a lot of the dot-com bubble. I was in the US, I was managing the S&P book and managing the ETFs. And I just remember that every time there was a rally post the dot-com bubble, there was just an enormous amount of people that had jumped into it too late. And so we had a wall of selling that continuously went. As much as people want to believe that the new administration has solved all the problems in crypto, the one thing it hasn't solved, we've seen a lot of final agreements in terms of the settlements of some of the things that happened in 2021 and 2022 with FTX and everything along those lines. That's brought supply to the market. I think we're getting through a lot of supply, but I also think there's a lot of people that made the decision during the YOLO days of 2021 to move into crypto at the highs. And I think they have a lot of tokens that just don't have much value and have not been able to make money the way that they would have hoped. And so anytime something goes higher, just to live their life, to go on a vacation, to do anything, they're selling some. Once we get through that supply and we bring a little bit of speculation back, I think those names going higher will add the fuel to Bitcoin. But we're not there yet, but I think we're getting very close. And that's why I talked about it on the video this week.
I see. Great. Well, Jordi, thanks a lot for doing this. This was great. There's I definitely have to re-listen to this entire episode to extract all the high signal things that you just told us. That was amazing. So thanks a lot for doing this. Any last words? And also maybe where can people find you?
Well, they can find me on YouTube. They can find me on Substack for the institutional people who want to develop a relationship with 22V securities. I do a lot more specific on the investment side and different places where people can get in. I do a lot of deep dive research. I did a big paper on the embodiment of AI, which to me is the most important theme. And I bring that up because since you watched the video, Mark Andreessen just last week said this would be the biggest industry in the history of the world. Embodied AI, which basically gets into humanoids and drones and AI computers and AI phones. This is all coming in the next 2 years. So it's still very early, and that's what I write about and go through. So they can find me there. I post on X. I'm in LinkedIn. If you can't find me, you're not trying very hard. Just go into AI and type AIM. And that's the final message I will say to people. If you go to my Substack, I'm trying to help not only you, but children. If you don't want to use AI for yourself, you want to do it for your children. You want to get them using it. You don't want to say, go to school and read books and do all this stuff. As much as I believe that that's an important part of learning, the most important part and efficient way of learning is to brainstorm with AI, and you have to make that decision to do it first. The Substack I'm posting this week will go through this, a lot of things I said today, and just remember, hallucinations or creativity, get on an LLM today.
Amazing. Yeah, I'll be definitely be looking out for this one on your Substack. And so, yeah, I mean, I would love to pick your brain some more, but I'll save that up for a future episode. So, Jordi, thanks a lot for doing this again, and yeah, have a great day.
You as well, and thanks for reaching out.
Thank you. Bye.